Let's talk about where stockbrokers fit into the picture. Financial planners have very broad services. They look at things like welfare and Centrelink, superannuation rules, your goals and retirement plans. They work with other advisors like accountants, mortgage brokers, estate planners, insurance brokers. They have a number of people they deal with, and they have to really understand your whole position comprehensively. Once they've understood what your goals are, perhaps your retirement plans, they must put in place an investment strategy. An investment strategy is one of the most important documents that a financial planner can assist you with. They're very important because the way they're built determines your long-term wealth and ability to meet those targets. Three considerations are the time your investments will be invested for, the assets or asset allocation that your funds will be put into, and the risk tolerance, your ability and your want for a level of risk. Now, with such a big job, financial planners often outsource the responsibility of the investments to different parties. One of those parties is a stockbroker, and that's who we will concentrate on today. The other part is a fund manager. Fund manager. Fund managers are also referred to as mutual fund managers. Stockbrokers, in a sense, have a couple of different types of stockbrokers. One being the older style stockbroker and the other the new style stockbroker. Old style stockbrokers deal specifically and very much so in shares. Shares in the sense that they'll know what's happening in the news, they'll know about specific companies. They'll talk to you about buys and sells, they'll talk to you about IPOs, initial public offerings of hybrids or of shares, and they're commissioned in a sense by every time you trade. So if you were to trade buy or sell, they might receive 0.5% to 1% of the amount that you invest. So if you invest $100,000, that would be $500 or $1,000, depending on their fees, every time you buy or sell. The new style stockbroker is more aligned to the financial planner. They look at your investment strategy and they want to understand different assets, not just shares, but they'll look at asset allocation in shares, bonds, cash, and even some might consider commodities like gold, for example. The asset allocation is where they'll focus. They'll focus on the investment strategy, and they'll also understand the economies. So economics and the effect different economic seasons or conditions have on those assets. So they'll understand what high growth in the economy would do to certain assets, what a recession would do to certain assets, also what high inflation would do and what deflation would do. They should understand the relationships when they're structuring your portfolio. They will also have an understanding and be able to clearly explain different security types. So when they're talking to you about shares or bonds, they'll be able to explain the different risks associated with each type of security to make you comfortable with what you're investing in. Their ability to communicate is actually one of the most important reasons why you should choose one stockbroker over another stockbroker. Really, when it comes back to the investment strategy, Investment strategy are clearly defined guidelines and rules so that it doesn't matter what happens in the market, whether the market rises really high, that you don't go and then buy things, or if the market falls really far, that you don't just go and sell, that they can manage your emotions. Behavioral management, in a research survey done by Vanguard, found that 1.5% of your performance can be attributed to your behavior. And this is where they can really add some value. So that's something to note when you're choosing your stockbroker. The new way of charging for stockbrokers is assets under management, and they might charge something like 1% of assets. And they might do that through a separately managed account or an individually managed account, which is a new type of technology that allows them to more easily charge and administer a platform. The positive with this is that unlike in the old style, where the broker sometimes might get you to buy and sell things, I'm not too sure if the reasons are pure, because when they tell you to buy one bank, or sell one bank to buy another bank, or sell one telco to buy another telco, you're not quite sure whether they're telling you that to earn commission for themselves or whether that's the right thing to do. In this new structure, that concern is taken away. Now, a question might arise, what's the difference between the stockbroker and the fund manager? The fund manager might charge a fee, an active fund manager might charge between 1% and 2% in the funds that it manages. Now, a fund manager doesn't talk to clients. A fund manager generally doesn't talk to clients. They are focused on the investments, on analysis and research. They have a certain approach to the way they invest their money. Where the stockbroker and the financial planner, they speak to clients and they pass on and communicate information. The fund manager is relying on the stockbroker and the financial planner to do that for them. They don't want to be engaged so much in that type of communication. They want to be focused on the investments. So the advantage with the stockbroker is that you can pick up the phone and call them and ask them what's happened, or what's going on with the economy, and talk to them about your portfolio specifically. Where the fund manager is one step removed in that sense. Now, since 1997, when CommSec released their online website that allows you to buy and sell stocks online, stockbrokers have really had to step up and really show their value. And really, what they've done is many have moved into being more financial planners to have a broader service level. And some have become fund managers. If you think of Warren Buffett, he started as a stockbroker and moved into fund management. But really, the value they can add falls mostly around the investment strategy and the behavioral management of your assets. The communication they have with you is very important when it comes to delivering that extra value. The information here is just general. It's here to assist you, but I'm not licensed and it does not in any way provide any recommendations as to what you should do. Please consult an advisor for that type of information. In my next video, I'll talk about what you should be looking for when you look for an advisor, whether that be a stockbroker or financial planner, and the value they should be adding towards you.